Something strange is happening in the 2026 job market. For a handful of skilled professionals, this is a golden age, with some roles seeing pay increases of 20% or more. But for millions of others, it feels like the ladder to success has been pulled up. Consider the numbers. In 2025, the US job market added a shockingly low 181,000 jobs for the entire year, a historically weak performance. Then, January 2026 brought a surprisingly positive report of 130,000 new jobs. But that figure, while beating expectations, is still sluggish by historical standards. Meanwhile, for most workers, salary budgets are flat, meaning their paychecks aren't keeping up with the cost of living. So you have soaring pay for a select few, while the broader market is just treading water. How is this possible? More importantly, what does this mean for your career and your money? This is the 2026 job market paradox. We're going to break down exactly why it's happening and what you can do to make sure you land on the right side of this economic divide. The Great Decoupling: productivity without people. The number one driver behind this paradox is the wild acceleration of artificial intelligence. For years, we've talked about automation, but we've now hit a definitive turning point. AI is no longer just for automating simple, repetitive tasks. It's now augmenting, and in some cases, replacing work that requires critical thinking. This has created what economists call growth with fewer jobs. Companies, especially in tech, finance, and professional services, are using AI to become incredibly efficient. They can now create more, sell more, and generate more profit without hiring more people. The headlines tell the story. In 2025, companies cited AI as a reason for nearly 50,000 job cuts, and that trend has continued into early 2026. But this isn't about a robot taking every job. It's about technology making one highly skilled person as productive as 5 or even 10 people used to be. The result? The economy can keep growing, and the stock market can hit new highs, even while the job market feels like it's at a standstill for most people. The Great Mismatch: a crisis of skills, not jobs. It's not just about AI replacing jobs, it's also about a massive structural mismatch between the skills companies are desperate for and the skills the available workforce actually has. We are facing a skills gap on a scale we've never seen before. While headlines are full of layoff announcements, many employers report that they are struggling to find qualified workers. That sounds like a contradiction, but it's the very heart of the paradox. There are open jobs, but the people looking for work don't always have the specific, often technical skills needed to fill them. The evidence is everywhere. Job postings that mention AI skills have exploded, and those roles often pay a significant premium. One analysis found that having AI expertise on your resume can provide a bigger immediate pay bump than a master's degree. Employers aren't just looking for a college diploma anymore. They want to see verifiable, job-ready skills. Think about who's actually hiring. The January 2026 jobs report showed that gains were concentrated in a few specific sectors. Healthcare and social assistance saw big increases, adding 82,000 and 42,000 jobs respectively, largely driven by our aging population. Construction also saw solid gains of 33,000. But other huge sectors, like retail and leisure and hospitality, were basically flat, and financial activities actually lost jobs. The demographic squeeze: fewer people, tighter market. There's one more piece to this puzzle that most people miss: demographics. The American labor force itself is changing dramatically. For decades, the share of the population that is either working or looking for work, the labor force participation rate, has been slowly declining as the baby boomer generation retires. As of January 2026, that rate was just 62.5%, well below its peak back in the year 2000. A smaller, slower-growing labor pool has a strange, counterintuitive effect on the job market numbers. It lowers the bar for what we consider a good jobs report. In the past, the economy needed to add hundreds of thousands of jobs every month just to keep up with population growth. Now, that break-even number is much lower. Some economists believe that in 2026, we may only need to add a few tens of thousands of jobs a month to keep the unemployment rate from rising. This helps explain how a gain of 130,000 jobs in January 2026 could be seen as a strong report, and how it could happen at the same time the unemployment rate fell slightly to 4.3%. The pool of available workers isn't growing as fast, so even a small number of new jobs can absorb a larger chunk of those looking for work. This demographic squeeze further tightens the market for workers who have the right skills. Companies are competing over a structurally smaller group of people. This creates a low-hire, low-fire environment, where businesses are slow to hire unless it's a perfect fit, but they're also terrified of letting go of the skilled workers they already have. So, while the overall job growth numbers look weak, if you're an in-demand worker, your experience is very different. You are a scarce resource in a shrinking talent pool, and your paycheck reflects it. The paradox is that this demographic shift does little to help those whose skills are no longer in demand, leaving them on the outside looking in. The two Americas of 2026: who wins and who loses. When you combine AI-driven productivity, a massive skills mismatch, and a shrinking labor pool, you don't get one job market, you get two existing side by side. In the first America, you have the winners of this paradox: the AI specialists, the data scientists, the specialized healthcare professionals, and the high-skilled engineers. For them, the market is on fire. Their skills are so valuable that companies are offering them not just more money but a better life. In fact, some research has shown that jobs requiring AI skills are far more likely to offer premium benefits like remote work or generous parental leave. In the second America, we find everyone being left behind. This group is broad and diverse. It includes recent college graduates finding that their degree isn't the guaranteed ticket it once was, with unemployment for younger workers ticking up. It includes mid-career professionals whose routine office tasks are being automated away by AI. And it includes workers in sectors like retail and customer service, where wage growth is lagging and automation is a constant threat. For this group, the job market feels broken. They see headlines about economic growth, but their own financial situation is stuck in neutral or going backward. The number of people working part-time because they can't find full-time employment remains high, and long-term unemployment is higher than it was a year ago. They are on the wrong side of the skills gap, and the path to the other side isn't always clear. This split is the human story of the 2026 job market paradox. It's creating a two-tiered society where your financial security is tied not just to having a job, but to having the right job with the right skills. And the gap between these two Americas is getting wider. The 2026 job market paradox is a wake-up call. It's revealing a future where high wages for some can exist right alongside stagnation for many. It's a world where productivity and prosperity are no longer automatically tied to broad opportunity for everyone. The key takeaway is this: in this new economy, skills are the ultimate currency. The real question is, how do we make sure more people can get their hands on them? I want to know what you're seeing out there. Are you experiencing this paradox in your field? Are you one of the lucky ones with in-demand skills, or do you feel stuck? Let me know your story down in the comments.